Welcome to Confidently Covered. I'm your host, Pete Walther, and we're here today to talk about non-fungible tokens or NFTs. And I'm delighted to welcome my guest, Greg Adams, who's with the Fine Arts Group. Greg, thanks for joining us.
Pete, thanks so much for having me. Looking forward to chatting.
Now, Greg, you're an NFT specialist and advisor, and I was hoping maybe you could share with the audience a little bit of your background and how you ended up on this wild ride of NFT, which has gone from, a non-existent marketplace just 10 years ago to a $40 billion asset class.
So I've been in fintech for quite some time. I spent a lot of time at Vanguard doing project management and basic financial advice. So I've been around finance and technology for quite some time. And I guess it was 2017, one of my developers came to me and said, "Hey, Bitcoin, this is a thing. You should probably check it out." So I started investing in Bitcoin back in 2017, and it worked out pretty well. But yeah, it's ever since then, I've kind of had an affinity for what's next, which is blockchain, NFTs, and the Web3 experience.
That's cool, and I think from my perspective, this is particularly interesting for us as a business that's used to working in the world of conventional physical art versus digital art, and seeing it emerge as this as a separate asset class, and one that's got a lot of growing up to do. I would say relative to the lots of questions around regulatory environment and risk, but not the conventional risk. People aren't worried about water damage, smoke damage, fire damage. They're really more worried about a host of other factors that are more consistent with financial investments, I'd say. Any reaction to that, Greg?
Of course. So yeah, as opposed to fire damage or any kind of water damage, digital assets don't have any kind of tangible, touchable products. So it's a completely different game with having things that are out there on the blockchain. You're worried a lot more about security, passwords, and kind of maintaining a defensive stance on all of your holdings.
That makes sense. And maybe it would be helpful for our listeners if you could just level set everybody with the language of NFTs, and maybe start with the definition, a layman's definition of non-fungible tokens, and compare that to fungible tokens, and how do you distinguish the two?
Of course. So NFTs, non-fungible tokens, are specialized, unique tokens that live on a blockchain network. So Solana, Ethereum, etc. Basically, the difference between an NFT and, say, a regular Ethereum token is that an NFT does not directly correlate to another NFT. So as where you have one Ethereum token equaling one Ethereum token, with one NFT, it could be multiple Ethereum tokens, it could be no Ethereum tokens, but they're not directly correlated with any other NFTs. So they're a standalone token, which has its own unique worth.
So that's interesting. And with respect to Web3, tell us about why the role of Web3 is so important in terms of the development of the internet, and how it specifically ties into NFTs and blockchain more broadly.
So Web3 is the next generation of the internet. So right now we have, if you visit one website, you get the website, that's it. And it's this different passwords scattered about for every different website you have a subscription with or have an account with. What Web3 does is it centralizes your password. So essentially you have your wallet that represents you on the Ethereum network, and everything will react to what's in your wallet. So if you have like a membership NFT in your wallet and you connect to, say, American Airlines, they'll automatically know your frequent flyer number. They'll know how many miles you have, and you don't have to necessarily remember a password or log in differently. All you'd have to do is connect your wallet to the website, and it knows who you are, it knows what to display, and how to treat you as a user of its website.
Wow, the power of Web3 plus blockchain seems so incredibly compelling. Yet, like many transformations that occur, I'm sure there's still a lot of resistors to change. People who are slow to adopt to change, and part of that, I'm sure, is just understanding and language. What do you see as critical things that must happen to have that breakthrough for people to move from, certainly not early adopters, but to adopters in general?
I think usability and how people interact with blockchain right now is a little bit clunky. So once you see, I know there's tons of companies out there working on it. I know Amazon is one of the leaders in this area at this point. But once you have more companies investing in the infrastructure around blockchain, I think you'll see that that technology progress quite quickly. Once that infrastructure is built and it's easy to use, I think it's going to be very powerful, like you mentioned. I think it's just it's still very, very young. It's in its infancy, if you will. We're just starting to scratch the surface here.
So, Greg, some in our audience may think of NFTs like digital currencies and fear that there's similar volatility. Two questions. Where do the similarities begin and end in your view? And is there any way today for investors to decouple the value of the art and the fluctuations there from the underlying digital currency exposure, which can be quite volatile?
Yeah, the volatility of the blockchain and the currencies, the cryptocurrencies, is a weakness for sure. And it's really difficult, if not impossible, to decouple the currency risk of buying an NFT on a blockchain. It's since they're so closely together, it's like layer one and layer two. You have to go through Ethereum to purchase an NFT. So it's almost impossible. So the way I've been seeing it happen is people are thinking either in Ethereum tokens or US dollars. So if you're purchasing an NFT for $1,000, you want to sell it for $2,000. But what that comes through as is based on timing and the value of Ethereum. You could be paying one Ethereum, and that's $1,000 to begin with, and then selling it for $2,000, and that might be 0.5 Ethereum. So you have these two different moving points at any given time, which makes it a bit more tenuous investing in some of these assets.
Okay, no, that makes sense. And at a very basic level, what I'm hearing you say is that for one to participate in the NFT marketplace, they have to start by having a digital wallet, having digital currency at their disposal, and transacting in that fashion. Are there any exceptions to that?
You absolutely need a digital wallet. You absolutely are going to need Ethereum or Solana or whatever kind of NFT you're trying to purchase in a wallet. And the second piece, there's only one way that I can think of, and it's MoonPay. Basically, this is crazy and this is very forward thinking, but you can use a credit card to purchase NFTs on some platforms. And I think that's the easiest thing. But even when you use your credit card, there's still a conversion being made on the back end to take that USD and turn it into Ethereum. So no matter what, when you're purchasing an NFT, there will be a transaction with the Ethereum network.
And what is the actual process of creating or minting an NFT, and how does that actually occur? How does it take place?
So NFTs are built on smart contracts. So every smart contract is a little different, and there's more than one way to mint an NFT. For example, the easiest way is OpenSea. So you can go on to OpenSea and say, I want to make an NFT of this picture of my cat. You upload a picture of your cat. You can type in what you think about your cat or what your cat's name is. You can put all that data in around that picture, and OpenSea makes it seamless. Assuming you have your digital wallet and some Ethereum to make the transaction go through, you could easily mint an NFT in under 10 minutes on OpenSea. So it's not necessarily a hard process to mint an NFT. You can do one NFT, you can do 10,000 NFTs. It's pretty straightforward. It just depends on which platform you're using to mint NFTs, and there's a lot of places to do it.
So that's interesting, Greg, relative to the minting and how efficient that process can be. If I'm in the audience and I'm a bit of a skeptic, I'm worried about bad actors. I'm worried about, the collapse of FTX and how does one get comfortable and verify that they're actually dealing with the right actors?
Yeah, that's a huge concern for sure. So most marketplaces have a screening service that goes through their products and says like, oh, this is a ripoff, or this is fake, or this is counterfeit. And they also have verification badges as well. So think of Twitter or Instagram or Facebook, and that little blue check mark denotes you're legit, right? So OpenSea, NFT marketplaces in general will generally tag genuine artists and verified creators with the blue check or whatever their equivalent is. So there's that. And personally, I always look at what wallet an NFT came from. I know if I'm looking for a particular artist, I'm going to find that artist's page. I'm going to look at what their wallet ID is or wallet address is and say, like, okay, I only want to buy NFTs from this wallet in the future. There's been a number of different scenarios where an entire collection got ripped off, just like someone took all the images and saved them and created their own collection. And ultimately, those were taken down by the marketplaces. So there was like a fake Bored Ape Yacht Club, which is a huge NFT name. It's one of the more successful collections, but somebody tried to rip them off, and OpenSea essentially shut them down and stopped the bad actors from doing business. So there are safeties in place on most marketplaces, and always look for verification, always check a wallet. But those are the safest ways to kind of go about looking for an NFT.
And is there a silver lining with the collapse of FTX that, they'll be a different different level of acceptance of some, greater form of regulation, checks and balances, and maybe the elimination or of some of these bad actors?
I think FTX had as horrible of a situation as it was. A lot of people lost money in that situation. I think it definitely shook out a lot of bad actors. And I think ultimately it is going to lead to more regulation. And I think it's kind of a double-edged sword. So I think crypto, a currency in general, and NFTs need some sort of guidance. And I think the governments are just starting to get on that. They've been working on it for a while, but nothing has really been solidified. And I think once there's a set of rules that everyone can play by, and there's legal enforcement behind it, that's when you'll see this market bloom. It just needs to age and mature, and there needs to be proper guardrails in place to protect consumers for sure.
Yeah, that makes sense. And I think that in that evolution, right, we've gone from a business model that's, centuries old, that's been very hierarchical in terms of controls and ownership and structure, top down, to one that is designed intentionally, right, to democratize and decentralize ownership and control. So it's swung from one extreme to the other, and it feels like it's got to find its balance somewhere in the middle.
Yep, it was for a very long time the Wild West. Some people don't like using that term, but it was very much shoot them and run for a little bit, which is where many people's fears of cryptocurrency came from, is when there was a lot more malicious activity in the DeFi networks. So yeah, I think it's already matured. It's already come very, very far from where it has been. I remember getting multiple scam DMs a day on LinkedIn or Twitter or any assortment of places. And since FTX and other situations have kind of come and gone, I've personally seen a lot less of them.
That makes sense. And when you think about, this paradigm shift and how quickly it's occurring, I can't help but think about, what transpired in terms of DVDs at the retail level to streaming services and how quickly that all took place. It seems like there's an element of that here in a fairly significant way, but it also feels to me that there's still going to be a bit of a two-speed system where physical art is still going to have its place, and the role of galleries and auction houses, et cetera, will persist, but maybe they have to redefine their operating models a bit. Any thoughts there?
Yeah, so you're right. I don't think galleries are going anywhere. There's always going to be an element of physical, tangible art. Like, so many people still just want to say, I have a painting on my wall. That's still something that is not necessarily the case with an NFT. So yeah, I agree. There's going to be changes, and you're seeing Christie's and Sotheby's kind of leading the change from an art perspective. So Christie's came out with Christie's 3.0. I've definitely seen the NFT. I think it's Sotheby's Metaverse is how they branded it. But basically, you're seeing investment and a lot of resources getting put into building this infrastructure for NFTs and digital currencies. A lot of the lots that you can buy on Christie's accept crypto. So there's definitely changes coming. I think there's going to be adaptation needed by a lot of galleries, and you're going to see a consolidation of those that choose to invest in it and those that don't. So there's going to be a split for sure.
Hey, Greg, I would love it if you would share with us some recent trends that are occurring in the NFT marketplace.
Of course. So recently, there's been a big push for open editions. So open editions are where an artist will open a mint and basically say, here's a link to this contract. If you want to go mint it, it's open for the next X hours or days, or I think the longest one I've seen is a week. So basically what they do is create a piece of art, and however many editions get created. So it could be 5, it can be 5,000. I think the highest one I've seen was 116,000, which was a lot of NFTs for an open mint. And the thing with open editions is they're often very, very low priced. So these are NFTs that are maybe $10 to $100. So there's not a big investment. So it's kind of to get the reasoning behind it is very interesting. So open editions are more or less to onboard new collectors and new users, which I think has been a boon for the NFT space for sure. But it's interesting. The biggest sale in January was a CryptoPunk, an alien CryptoPunk. And I believe the sale price was $1.2 million.
Wow.
And that raised a lot of eyebrows. So just in February, there was an open edition that there was a single image, and I think they had, I think it was 16,000 people mint it. And I think the overall cost was like $8 or $12, depending on when you bought it. But it was like, I'm not sure if the math adds up here, but the overall take on a single image was $2.2 million with an open edition. So that, I think, it turned a lot of heads. There's been a kind of deluge among artists to create open editions just to get their name out there. It's both a marketing tool and an onboarding tool. But there is some dissent and pushing back, saying like, yeah, maybe this is not the best strategy. It's something we've seen previously in the traditional art world. So basically, an open edition, there's no scarcity to it when it first comes out. But that's been the biggest craze so far this year in 2023, open editions.
And just one question there, who typically sponsors those open editions? Is it a gallery? Is it an auction house?
Artists. So the big one in February was solely marketed on Twitter. There was no other marketing expense jotted down. It was a tweet that went out and went viral, and it was a catchy image and a rather large name artist, and it just took off.
So real grassroots sort of approach.
Yep.
That's very cool.
No major galleries involved, artist to consumer.
Yeah, really interesting times. Now, we work with a lot of family offices and ultra high net worth individuals. If someone from a family office, whether it's a patriarch or a matriarch or a family office executive, comes to the Fine Art Group and says, "Hey, Greg, we haven't explored any investments in NFTs previously, but we do have room within our alternative asset class to make some investments, and we'd like to dip our toe in the water." What's that conversation sound like from your vantage point?
Yeah, we've actually gotten a bunch of requests just for education. People want to know about it. So you're seeing a lot of family offices interested in it, and that is a real thing that's happening. It's interesting to get their take on it. It's as much as it is to educate them on what we're seeing so far. It's usually we've only done a couple engagements with anything further than education. But I feel like there's room to build services in the future around both advice and possibly appraisal of NFTs. So there's definitely spaces for the Fine Art Group to assist with, and I think there's a lot to learn. We haven't been actively pushing it, but we are here to help clients understand what's going on in the NFT world. It's going to be an interesting couple of years as these assets mature.
And we find our clients becoming increasingly global in nature, especially as they move from generation to generation. And that creates all sorts of challenges if you're the family office executive trying to manage decision making. What do you see as the role of DAOs or decentralized autonomous organization relative to potentially assisting making it more efficient and effective from a family office vantage point?
DAOs are definitely changing the way groups democratize choices and run a business. I've seen several businesses successfully launch based on a DAO structure. So instead of like the traditional corporate structure, which I'm sure you guys are familiar with, they're using basically open voting in a DAO setup. So if, for example, my favorite example is Links DAO. So it's basically a DAO that was set up to purchase a golf club. Like that was the charter of Links DAO, was to purchase a golf club for its members and encourage growth in the game of golf. So recently I was asked to vote on, I'm a member. Recently I was asked to vote on if I was okay with them bidding for a golf club in Scotland. Of course, I said yes. I would love to visit Scotland and go golfing in Scotland. So, of course, I said yes. And recently, they just came back and announced that we purchased the golf club in Scotland. So the thousands of users that are part of Links DAO all had a say. It goes out as a public vote. If you have more than one token, you get more than one vote. And it's really changing the game. It could also be used in a family office setting as a decision point. So with your global families that are using, let's say, a notary at this point, multi-signature wallets are being built at this point, where there's going to be, for a transaction to fully process, it'll go to 5 or 6 or however many wallets you need to get authorization for a transaction. For instance, if say great grandma dies and you need to have people sign off on a will execution, theoretically you could do that all through a multi-signature wallet, and assuming everyone is verified with their wallet address, make a financial decision in a couple hours as opposed to a couple weeks, getting paperwork together. So there's a lot of different applications for the technology, and I think you're only going to see it expand in the future.
That's fascinating. And it's a nice segue to my final question, which is, when it comes to generational wealth transfer, NFTs, digital currencies, are there solutions available today that can be implemented without, say, the need to give future generations access to one's passwords, or to give them access to keys up front, to enable a downstream, transition of wealth?
There is. Recently, I've been on a couple of different podcasts and interviews that I've gotten a chance to bump elbows with a company called Malka Meet. They're a security company. They're very well established. They have warehouses in the US and abroad. And effectively, what they've created is what they call a ballet wallet. So what this is it's a physical card that can be placed in a safe, for example, in a Malka Meet warehouse. And I feel like this is an ad, but I'm totally not pitching them. This is just one product that I've discovered that makes this very easy. So what they do is they have a tear off. So if you have this physical card, you can load all of your assets onto this card, and you can control them, you can trade them, whatever you so choose. It will stay secure on this card. And the only time that you can get your pass keys to remove them fully is if you peel back a sticker that reveals the passcodes on the actual physical piece. So theoretically, you could have a fully secure vaulted storage of your digital assets. So Bitcoin, NFTs, Ethereum, whatever you may have can be stored on that ballet wallet. And this is the first instance actually that I've seen of digital assets. So I was just chatting the other day with one of my contacts there, and they've actually gotten insurance for an NFT, which was thought of as impossible as little as a year ago. So there are ways to pass down digital assets in a secure manner that would allow for everything being secure without divulging any kind of passcodes or keys beforehand. That's one of the few options that I've seen so far.
It's fascinating to see how quickly everything is evolving, and you've got to be committed to doing the research and understanding what's out there, because it's not necessarily overtly available unless you look for it. Greg, thank you. This has been a fascinating conversation. I could go on for another hour with you. Really appreciate you sharing your time and your knowledge with the audience today.
Of course, happy to help. Thank you for having me. It's been great chatting for sure.
Well, folks, that's our episode of Confidently Covered. Thank you for joining us, and we look forward to seeing you the next time. If you're eager to learn more, you can find a list of resources in today's show notes, or head over to mmapcs.com. If you enjoyed this episode, be sure to leave us a kind review, like, and subscribe so you know when we release new episodes. Lastly, we invite you to come on over and join the larger conversation on our social media channels. You can find Marsh McLennan Agency Private Client Services on LinkedIn, Facebook, and on Twitter. This has been Confidently Covered. We'll see you next time.